Welcome back, good people, to another video, live stream, whatever you want to call it. We got a lot going on in today's discussion. We got a lot going on in today's discussion. We're gonna cover a lot. Stock market is going crazy, right? We started the month of September just bananas. It is just bananas. So we got to talk about that. We got a lot of subjects we want to cover today. We're going to cover certainly what's going on with the stock market right now. We're going to cover the Fed and why Americans, ain't ready to celebrate this whole rate cut thing. Americans are not ready to celebrate. We're going to talk about that. We're going to talk about what's going on in the stock market. We're going to talk about current market. We're going to talk about historically what has happened in the month of September, because I know I'm getting that question a lot from you guys. Hey man, I'm hearing and reading all this stuff that Septembers are just trash and nothing's gonna bounce. We're gonna talk about that. I'm gonna give you the expert's opinion. I'm gonna give you my opinion, but I'm gonna give you the expert's opinion as well, because I'm not an expert, right? I'm just a regular schmegular. So I'm just a guy on YouTube. So I'm gonna give you what the experts believe historically has happened in the month of September when it comes to stocks, right? Investments, ETFs, you name it. And then we're gonna talk about the 900-pound silverback gorilla. We're gonna talk about that at the end. Is now the time to buy or sell Nvidia stock? We're going to talk about that. We're going to talk about that too. Is it time to buy or is it time to sell? Yeah, that's a question I'm sure a lot of us are struggling with. Especially if we got in at the beginning of August at $90 a share. The thing ran itself up to $130 a share. Right now it's sitting at about $112 a share. It just don't make no sense. I mean, for a guy like me, it don't make no sense, but this is where we're at right now. It don't make no sense, but here's where we're at. What we gonna do, right? So we're gonna talk about that. Before we do that though, do me a big favor, guys. Get down in that description box, click on that Richard Fain Millionaire Mentor Instagram link, and give me a follow on Instagram. And then send me a DM and let me know that you're rocking with me so that I can say thank you. Do me that big favor, guys. Go support me on the Instagram page. Get down to the description box, click on that Richard Fain Millionaire Mentor Instagram link, and give your boy a little level of support, and then send me a DM to let me know you're rocking with me. Y'all know I appreciate that. Trying to get the Instagram thing up and going, trying to, get some more followers. My old Instagram page, 90,000 followers, got shut down. I'm trying to rebuild this thing from the dirt, from the mud, trying to build this thing from the mud up. So I need your help. Get down to the description box and click on that Richard Fain Millionaire Mentor Instagram link. Thank you, thank you. Website, www.richardfain.net. 4.5 months in existence. Over 350,000 of you guys have went and checked out the website, so thank you. Do me a favor, another 350,000 of y'all go check it out. And while you're there, consider the digital products. Got 10 big boy blue chip digital products that can collapse time frames and get you to your pot of gold faster through education and then confidence. Because education and confidence, when you marry those two together, typically you get execution. All right? You got just a little level of education, know what you're doing. You got you some confidence because you know what you're doing. That normally leads to execution. So treat yourself. Don't cheat yourself. Get over to the website, second link down in the description box, www.richardfain.net. Treat yourself, don't cheat yourself. While you're there, think about joining the Wealth Builders, fastest growing financial community on Patreon. You can join through the website. Just click on that membership button, that join button, and come join 1,000 plus wealth builders. See, we've grown this community from just me, one person, me. I was the first person in the community. We've grown it from just me, 4.5 months later, to 1,000 plus people in 4.5 months. Yeah, since April, mid-April. We started mid-April. So mid-September will be 5 months. So we started with just me, and now we got over 1,000 people in there, all wealth builders headed in the same direction. If you want to be a part of a family, a financial family that got your back, come check us out. Just go to my website, click on the membership button, click on the join button, come join us. Come join 1,000+ people going in the same direction, financial freedom. It feels good, guys. It's amazing when you put yourself around a community of people who are like-minded. It's amazing. So check us out. Moomoo, my self-directed brokerage app that I'm using to 10x my net worth over the next 10 years. The good folks at Moomoo said, hey, Richard, since you like our brokerage app, why don't you offer it to your folks that watch your YouTube channel? Maybe they can try us out. And if they do try us out, we're going to give them up to 15 free stocks for just trying out our brokerage app. That's our way of saying thank you to them for just trying us out. We're going to give them 15 free stocks, up to. Let me make sure I put the up to in there because it depends on how much you deposit in your new brokerage account. Here, let me explain it. You put $100 in your new brokerage account. When you open your Moomoo account, you get 5 free stocks, publicly traded companies. If you put $1,000 in your new Moomoo brokerage account, you get 15 free stocks just for trying out the brokerage app, guys. You know something, guys, it's hard to beat that. It's hard to beat that offer, especially if you're somebody that's 18 and up. If you're 18 years old and up, and you're trying to figure out a way, how do I build some wealth through paper assets? I'm just trying to get myself better financially. Then you're going to need a self-directed brokerage app to make that happen. And I think Moomoo is one of the best out there. In my opinion, it is the best self-directed brokerage app on the market. That's my opinion now. You may disagree, or somebody else out here in the YouTube world might disagree. But as far as I'm concerned, it's the #1 app out there. So you do yourself a favor. Like I said, don't cheat yourself. Treat yourself to 15 free stocks. Treat yourself to instant net worth, because those 15 free stocks have a value associated with them that the good folks at Moomoo are giving you free. See, the good folks at Moomoo are giving you net worth free. They're handing you net worth for free. All you got to do is sign up using my link, first link down in the description box. Just sign up, put your $100 in there. They're going to give you 5 free stocks. That's instant net worth. You put $1,000 in your new brokerage account, they're going to give you 15 free stocks. That's instant net worth. That's net worth you didn't have yesterday. It's free net worth, guys. So don't miss this opportunity. Don't cheat yourself. Treat yourself. Get down in the description box. Click on the Moomoo link and get signed up today. Put you some money in there today and get yourself in position. We're going to talk about the month of September and why it's a critical month when it comes to the stock market. What has historically happened in the month of September? I think it's a tremendous opportunity. Y'all know I'm a glass half full, not a glass half empty guy. I think it's a tremendous opportunity the month of September for the people who want to build wealth. I think it's a tremendous opportunity. So here we go. For those of you that want to join and sign up for Moomoo and you don't know how to use brokerage apps, send me an email through my website, www.richardfain.net. Let me know you've opened the Moomoo account, you funded it, and you want to get some tutorial videos to help you learn how to use that app quickly so that you got the basics and you can start doing what? Buying paper assets to build you some wealth if that's what you decide to do, right? I can do that for you. All you got to do is send me an email and say, hey, Richard, I've opened my Moomoo account. I funded it. Would you go ahead and send me the tutorial video so that I can learn how to use this thing? And by the way, I know you got some wealth transfer blueprint videos that you've done outlining all the investments you're buying. If you don't mind, send those to me. I know you're not a financial advisor and I know you can't tell me what to do, but at least I know what you're doing. So if I want to copy that plan on my own, I make the decision, I do the research, and I'm comfortable with it, and I want to copy your plan, I'd like to see what you're doing. So send those videos as well, just so that I know what you're doing. Not that I'm going to use it, but at least you got an idea of what I'm doing. I'll send you those videos too. All right, guys, let's dive into this thing, because I ain't going to keep you long. But we're going to start out with what in the world is going on this morning, September 3rd. did y'all see what's going on in the market? Oh my goodness. It's, I mean, you start out, guys, my goodness. Let's just start there. Let's start with the market this morning when it opened. Let's start there, and then we're gonna go into some other stuff. But let's start there. Dow falls more than 100 points as September trading begins. Stocks declined Tuesday as technology names struggled and traders braced for a potentially tough month ahead. And we're going to talk about this tough month of September in a second. Just bear with me. We're going to talk about this tough month of September. And then we are going to talk about Nvidia, because that's my company that I love and I got a lot of shares of. And right now the net worth on those shares is tumbling fast. It's like a downhill, like one of them big old gigantic 18-wheelers going downhill, and the brakes, they got no brakes. I mean, it's that bad, right? So we're gonna talk about that in a second, but let's paint the picture for the broader stock market right now, and then we'll zero in on the month of September, and then we'll zero in on Nvidia, because that's the 900-pound gorilla, right? Big boy in my portfolio. Not the only thing in my portfolio, but a big boy in my portfolio. So let's move on. The Dow Industrial Average traded 301 points lower, or 0.7. The S&P slid 1%, while the NASDAQ dropped 1.4. Guys, we've been up an hour. The market's been open an hour, and already you got the three major indexes slide. It's crazy, right? It's crazy. Stocks felt downward pressure as Nvidia, the high-flying artificial intelligence darling that has captured investor attention for more than a year, dropped more than 4%. ASAP Rocky. As soon as this thing was dropping in pre-market though. This thing was down to what? 115 in pre-market? And then as soon as the markets opened, that thing went all the way down to 112. I think it's lower than that, honestly. Let me do a temperature check. Right now, it is down. Oh, goodness gracious, guys. This thing is down to $110.86. You're talking about a $9 per share slide since the market opened. Well, let me rewind that. Since Friday of last week, it closed at 119. So Friday last week, it closed at 119. This morning, it opened at 116, and from there it has went all the way down to 110. The question is, how low will it go? And I know some of y'all are saying, well, golly, man, you're pretty nonchalant and pretty casual about this, seeing that you got 11,200 shares of this thing. You got a lot of money invested in this company. You seem like you're not bothered. You seem pretty okay with this thing sliding the way it's sliding. Yeah, I'm okay with it, because I've already told y'all I want to buy 8,800 more shares of this thing. So I'm thinking, get down to under $100 a share, Wall Street traders. Push this thing all the way down. And I know I'm going to let the cat out the bag. I'm going to let the cat out the bag. I'm going to let the cat out the bag. This dip season. September is dip season. So for real seasoned, long-term investors, this is dip season. For some of you folks out there that don't, y'all trying to be low budget traders, because you can't be the traders on Wall Street because you don't have the resources, you don't have the manpower, you don't have the technology, so you can't be them. So all you guys out here trying to be low budget traders with your iPhone, this is your technology, your iPhone, it's gonna be a rough month for you. But for a guy like me that's long on this thing, and understand the month of September is dip season, historically it's been dip season, yeah, I'm okay with that. I'm okay with picking up another 8,800 shares under $100 a share. I'm okay with that because I know at some point this thing the pendulum has to swing. I don't know when. I don't know if it'll be in October, November, December, January next year. I don't know when it's going to be. But the pendulum will swing again in favor of this company. And when it do, my plan is if I can pick up me some more of these shares under that $100 range, down below hundo, oh, goodness gracious, boy, I'm going to be in good shape. So, hey, 110.52, keep dropping. Wall Street traders continue to crush this thing on down to under $100 a share because there's no business performance issues. This is what I hang my hat on. So I don't worry about the stock. I worry about the company. And ain't no problems with the company. Now, yeah, people can say what they want to say about Blackwell and all this other propaganda. I don't believe any of that. Now, you got to go out and do your own homework and figure out what you believe. But I don't believe any of that. What I believe is this is a great company and it will bounce back. The S&P 500 is full of 500 great companies. It will bounce back. FTEC is 324 great technology companies. They will bounce back. See, this is what I believe. The Mag 7, 6 of the top 7 companies in the world from a market cap standpoint, they will bounce back. See, I don't let this bother me because I'm long term. So if dip season it is, then dip season it is. I'm going to stick with it. Right now, temperature check, $110.15. Come on. We got to get it down to 100. Come on, Wall Street traders. Get it down to 100 so I can buy me 8,800 more shares of this thing. 110 is too high. I got to get it all the way down to under $100 a share. Once we get there, I'm going shopping. For this particular stock, I'm going shopping. I'm all in. I'm going shopping. I'm going to the reserve stash. I'm going to the reserve stash and pull it all out and go shopping. But it ain't there yet. So let's keep watching it, and I'll let you guys know if it gets there within this time frame I'm doing this, and we'll go ahead and execute the trade together. I'll show you the trade that I execute. So let's keep moving. All right. We talked a little bit about what's going on right now with the Dow, with the S&P, with the Nas. They all slid. They all sold off this morning. Stocks felt downward pressure from Nvidia, right? The high-flying artificial intelligence darling that has captured investor attention for more than a year dropped more than 4%. It was one of several semiconductor stocks, including Micron, KLA, and Advanced Micro Devices, seeing declines in the session. The Van Eck Semiconductor ETF, which is SMH, slid more than 3%. I'm telling y'all guys, they're brutal. These Wall Street traders are brutal on semiconductors. They are brutal on artificial intelligence right now. They are brutal. Why? Because big boys ain't in it. Big boy institutionals, they got all their money in money market right now. So Wall Street traders are ruling the roost. They're ruling the roost. They're in charge right now. And boy, they're going to work. Yes, they are. They are going to work. Now, here's what I want y'all to understand. Please, my opinion, not a professional, just a regular guy on YouTube giving you my opinion. As you know, Wall Street traders make their money through manipulation and three-card Monte. This is how Wall Street traders make their money. This is how they get you. This is how they get you. So remember, we go back to August, right? August 5th. Wall Street traders did what? They drove the prices down to what? $90 a share. For the big boy Nvidia, but they drove down others too. They drove down other semiconductors. They drove down hyperscalers. They drove down mega caps. They did that, right? They drove it down, called it Black Monday. And then what did they do? Think about it. Think about it now. I'm finna give y'all what's coming, but think about it. They drove it down in the beginning of August. And then what did they do in the next 3 weeks? They drove it back up to $130 a share. And then guess what they did? They said, you know what we're going to do? Here's the dump. Here's the dump now. Here's the dump. We're going to wait till August 28th. Earnings day for the darling of Wall Street. We're going to wait. We done ran this thing up to 130 though, guys, but we're going to wait until that day. That day, we're going to start dumping this thing. Because remember, they bought at $90 a share. See, what they do is they run it. This is what the Wall Street traders do. They run the thing down, and then they buy at the low. And then that starts running the thing back up when they start buying at the low. And then they pump in the propaganda. Run it up. And then what did they do? They said, okay, we're done. Let's dump this thing. So what do? August 28th, before earnings came out, they started dumping this. They started dumping this stock. They started dumping it. And then after hours, they accelerated the dump. They made a bunch of money because they bought it at $90 a share. They made a bunch of money. Now, what do you think they're getting ready to do right now in the month of September? Same strategy. They're going to run this thing down. They're going to run down semiconductors. They're going to run down mega caps. They're going to run down hyperscalers. They're going to run it down. And then guess what they're going to do? They're going to buy at the low when they run this thing all the way down. I'm telling you now, when they run this thing all the way down, they're going to buy at the low and then they're going to run it back up and they're going to dump it again. This is what they're going to do because this is how traders work. Until we get more institutional investors in this thing and smooth it out and take a long-term stance in this is what you're going to get, right? So that's my opinion. I don't have no proof of that, but I think this is what's happening today. Wall Street traders are in control of the stock market right now, and they know tech is the one that they can manipulate the most. That's the sector that they've concentrated on manipulating the most, is the tech sector, because they can, because of the 900-pound gorilla. Right? They can manipulate the tech sector, and that's what they're doing. They're going to run this thing all the way down. I don't know how low they're going to run it down, but if they get to $100, I'm buying. So they got me. they definitely going to get my money if they get it down to $100 a share. You got me. I can tell you right now, Wall Street traders, run that thing down to under $100 a share. You definitely got Richard Fain's money because I'm buying. But I ain't buying unless it get down to $100 a share, period. Anything else, I'm not buying nothing else. Other than my DCA into FTC, SPLG, and then the MAG 7. I'm not taking no lump sum money during the month of September and buying nothing other than Nvidia if it gets down to $100 a share. All the rest of that stuff they're trying to trick me into buying, I ain't buying. Buying none of it. Not no lump sum of my DCA I am, but not lump sum. Ain't falling for it. Because it's all it's a three-card Monte because they're in control of the stock market right now. So what's happening? Tuesday's moves kick off the new trading month. Again, I'm telling you what they do when they're in control of the stock market. They run these stocks down, they buy them low, and then they run them back up and they dump them. This is what they do, guys, Wall Street traders. This is the game they're in. And they manipulate the stock market to do that. That's my opinion. I'm not an expert. I've not worked on Wall Street. I'm just a regular guy giving you his opinion. They do this all the time when they're in control of the stock market. That's the same thing they did in August. They did the same thing in July. See, what you got to understand is the first 6 months of the year after June, a lot of your big boys got out of these positions. A lot of your institutional investors started getting out. So July, August, September, traders are in control of that. They're in control of the market right now. That's why you see it run up, run down, run up, run down, because they're in control of it. And this is how they make money. They make money by bottoming it out and then running it up through the roof, and then they dump it. That's what they do. That's my opinion. Y'all may disagree with that, but my opinion is this is how they make their money. And they do it very well. The good news for me is I don't care if they make their money. All I want to do is make mine too. So if they get it below $100 a share, that's where I make my money. I'm going to buy my shares and I'm going to go about my business. I don't worry about them because they're going to do that until they no longer control the market. Right now, they control the market. That's my opinion. No scientific proof. This is not financial advice. This is just for informational purposes only, based on my opinion. That's all it is. It could be 100% wrong. Tuesday's moves kick off a new trading month after the three major averages finished August with gains. U.S. markets were closed on Monday due to Labor Day holiday. But the momentum for stocks into September wasn't always expected. Concern over the U.S. economy falling into a recession, along with the unwinding of a popular hedge fund trade involving the Japanese yen, sent stocks tumbling in early August. At one point, the S&P was down more than 7% for the month before recovering. What did I just keep telling y'all, guys? See what they do? The Dow down in the gutter. In the gutter. In the gutter. The beginning of August. Down by more than 7% in the gutter. Before the month out, all-time highs. Guess what it's doing now? Going back to the gutter. Keep telling y'all this is what these guys do. This is what they do. This is how when Wall Street traders are controlling the stock market, this is what they do. That's what you're going to see in the month of September. They're going to run it down to the basement floor, and then they're going to run that thing back up to the penthouse. I'm telling you what they're going to do. They do it all the time. They did it in August. They ran the thing down to the basement, and then they took the thing all the way back up to the top penthouse floor, and then they dumped it. Okay, y'all believe whatever you want to believe. I'm just giving you my little 2 cents, but I'm telling you what's going to happen. Good news for me is I'm okay with that because I know what they're doing. So when it gets to my strike price, my buy strike price, I just buy. And I wait. I don't know how long I'm going to have to wait, but I'm going to wait because I got discipline, I got patience, and I got consistency. So I can wait. It got to get down to under $100 a share for your boy. When it get to $100 a share, I'm going to finish strike. I may have to pause the live stream and go get mine because I'm getting mine if it get down to under $100 a share. I ain't missing no opportunity under $100 a share for it to recover real quick on me. I'm going to get it. So I'm going to keep watching this thing, and if it does, I'm going in and making me a buy. I can guarantee you that. Right here on this phone, I'm going to make a buy. Right in front of you guys. So if it gets down, y'all let me know in the chat. If I'm distracted doing something else, let me know if it's under $100 a share in the chat. That's Nvidia, nothing else. I don't care nothing about nothing else. I ain't buying nothing else but Nvidia. So if it gets down, I'm good. If not, I'll live to fight another day. Maybe it'll get down tomorrow, but let's keep watching it. But the momentum for stocks into September wasn't always expected. Concern over the U.S. economy falling into a recession, along with the unwinding of a popular hedge fund trade involving the Japanese yen, sent stocks tumbling in August. At one point, the S&P 500 was down more than 7% for the month before recovering. Who do you think caused all of that? Wall Street traders. Wall Street traders. August got off to an incredibly rough start. This comes from Deutsche Bank, micro strategist. But after August 5th, calm began to return to the markets. In part, that was helped by more positive data on the U.S. economy, which helped to ease fears about an imminent recession. Now, what do we got coming on this Friday? We got the jobs report coming in on this Friday. Now, help me out here. If I'm a Wall Street trader, where's my opportunity? Let me just walk you through a Wall Street trader. If I'm a Wall Street trader, where's my opportunity? My opportunity is what? Tuesday, Wednesday, Thursday. There's my opportunity to drive this thing down to the dirt, to the basement. Let me buy then, and then we get a positive report on Friday. I may make a little money. I don't know. Maybe that's the case. Maybe it ain't the case. Don't know. I'm just saying you got the jobs report coming out on Friday. And if that thing is good news, that's a positive catalyst for the entire stock market. Not just Nvidia. It may not do nothing for Nvidia because Nvidia is a whole different animal. Nothing gonna happen for Nvidia right now until everybody comes back in. Now I know there are some ETFs starting to do some activity on Nvidia and buying Nvidia and giving a larger percentage of Nvidia in their overall portfolio. I get it. I know some ETFs are coming back in, but we still got $6.4 trillion on the sideline. When you got $6.4 trillion on the sideline, that's a lot of money on the sideline in money market accounts, guys. A bunch. Why is it on the sideline? Because these people don't know what's going to happen. They don't know what's going to happen in September. They don't know about the election. So some people might just sit it out. I don't know. Some of these big, gigantic institutional investors may sit this one out for 3 months. They may sit this thing out until what? November, mid-November, going into December. They may sit it out. Wall Street traders may control this thing all the way up to December. Who knows? That's why you got to be built for this and prepared for the long haul if you're going to play this game. If you're going to play this game, you better be built for it because these guys may be in control until December. Just telling you, you got $6.4 trillion on the sideline right now. So the Wall Street traders may be in control of this thing until mid to late November going into December. They may be in control. I'm just letting you know. So you better be built for this. You better be built for holding long term these big boy blue chip and concentrate on the company and not the stock. You can't control the stock. Nor can you control the company, but at least I can watch the company and it makes sense. What's going to happen with the stock price ain't going to make sense to you. I'm just letting you know it's not going to make sense. It don't make sense to me that you close at 119 and you start, and before the pre-market you're at 116. Now you done ran this thing all the way under $110 a share. For what? What happened? What happened between Friday and Tuesday? Did the company blow up? Did the CEO get ran over by a bus? Did some scandal happen? Nothing happened. That's Wall Street traders for you. That's what happened. These guys trying to position themselves to make another run like they did in August. The goal is to run this thing down to the basement, and then they're going to run this thing back to the penthouse on you. This is what they do. So be built for it. I'm just letting you know. Now, if you think you can, now, for some of us, that's an opportunity. If you're a short-termer in this thing and you're not a long-termer, this might be an opportunity for you to make you a quick buck. I don't know, because I'm not a short-termer in this stock. I'm a long-term guy. So I don't worry about buying it at 110 and selling it at 120. That's not my deal. That may be your deal, but it's an opportunity right now, potentially, given the fact that this stock just less than 2 weeks ago less than a week ago was trading at $128 a share. You can buy it at 110. 110 today. A week ago it was trading at 128. No material changes happened to the company. What does that tell you? Just saying, guys. You get in where you fit in. I'm not your financial advisor, and I'm not trying to tell you what to do. I'm just telling you where the opportunity is. I'm telling you how these Wall Street traders and what they're doing and how they manipulate this thing and how they make money. How do you make money? And for me, again, I'm long in this thing. So when I wrap up my money in it, I'm not going to sell it at $10 a share higher. Now, could I? Absolutely. Could I take some money right now and buy it at the 110 and then wait till 120 and sell it? I could, but I don't want to do that. I already got 11,200 shares in this price range. My average price range on my 111 share, my 11,200 shares is like 105. So it don't make any sense for me to buy it at 110. Don't make any sense for me. Only time it makes sense for me if I can buy it under the 105. If I can buy it under 100, it makes a bunch of sense. For me, at least. Because see, I'm looking for an 8-figure payday on this thing. I'm not looking for to make 50 grand. And I'm not saying that you don't have to look, that's a lot of money. But that's not going to buy me an island in the Caribbean. 50 grand ain't going to do it. I need way more than that. I got my little shorts for the FCF. I can make my little quick money off the my little quick FCF off the shorts. But the longs, I gotta go big. So where we at? 110.54. briefly touched at 109.40 today, guys. You're talking about a stock that closed at 119 a share on Friday. This thing got down to 109.40 3 days later. Ain't nothing happened to the company. Can you see the manipulation? Keep telling y'all, man. This is crazy. It's crazy. All right, let's keep moving. Let's keep moving. Get my last little bit out here on the Dow tumbles more than 400 points now. Not 100, 400. Boy, we ain't even been in trade in 2 hours and this thing done dropped 400. So what does that tell me? It's a broader stock market issue right now, what's happening. It ain't just the Dow. It ain't just the Nas or the S&P. It's the Dow. So when the Dow is involved in the drop, that means it's a broader, the whole stock market, right, is experiencing a drop. The whole stock market is experiencing a drop. The Dow is already dropped by 492 points. Just like that, less than 2 hours, the market ain't even been on about an hour and a half. It done dropped almost 500 points. S&P 1.3%. NASDAQ 1.8%. What's changed? What's changed from the all-time highs that they closed at on Friday, September, what day was that? What was that? 29th? What was that? Not September, but no, what day was that? Let me see what date that was. August 30th. What's happened? Please tell me, somebody please tell me what has happened from August 30th when the Dow, the Nas, the S&P all closed higher for the month, fully recovered, closed higher. You have Saturday, Sunday, Monday, and then the market opens again on Tuesday. What changed? Why is everything selling off right now? Keep telling y'all what's happening, man. These fools done ran this thing all the way up again. These Wall Street traders, they done ran this thing up all the way to Friday, August 30th. And guess what they're doing right now? They're selling off. They're taking profits. That's what they're doing. Every industry, every sector, they're taking profits. I keep telling y'all, Wall Street traders are controlling the stock market right now, and they're taking profits. Remember, they ran it down to the basement on August 5th, and the whole time, the goal was to do what? Run the thing back to the penthouse and then dump it. And guess what today is? Dump day. Today is dump day. Today is dump day. It's dump day. That's all. That's all that's happening right now is today is dump day because these guys made their money in August, right? They built their wealth. What I always tell you, they built their wealth in August and they're collecting their wealth in September. Built the wealth in August by doing what? Running things down to the basement and then running things back up to the penthouse. And then what do? Dump day today. This is dump day. You got to give it to them. You got to give it to them, guys. These guys are, they great at what they do. They know how to manipulate us. They know how to run this thing they know how to run this thing down to the basement, and then they know how to run this thing back up to the penthouse, and then they dump it. They parachute off the penthouse, top floor of the penthouse. You ever seen Tom Cruise in a Mission Impossible or one of his, you know how Tom Cruise, he on the top of the penthouse and don't know how he gonna get away, and the enemy coming at him, and what did Tom Cruise do? He reach into his shirt and he pull out a parachute, and they pull the parachute and they just come on down 100 floors, parachuting down with the wings out. This is what these guys are doing right now, man. And I know some of y'all are saying, but golly, man, how can you be so nonchalant about this? Because I've been doing this for 30 years. I know what these guys do. And it doesn't matter to me because I'm long. It presents an opportunity when they dump this thing today and they dump this thing over the next couple of weeks or the next week or whenever they stop dumping. They're going to stop it and they're going to do the cycle all over again. So what they're doing right now is they're dumping. They're dumping. This thing is and then guess what? They're gonna influence you to dump. See, they ain't the only ones dumping. The retailers are gonna dump too. Because we're gonna get scared, we're gonna get paranoid. Oh my God, this thing is going to the basement. I don't want to have. When I get to the basement, my money gonna be gone. I'm out of here. So not only are your Wall Street traders dumping right now, but you also have retailers that are dumping. And they're gonna run this thing down, and then that's what they're gonna do. They're gonna buy again. They're gonna buy again. And they're gonna continue to do that cycle, guys, until somebody stops them. Until not hedge funds, but big institutional investors stop them. They're gonna continue to do that same thing until institutional investors take that 6.4 trillion off the sideline and start making long-term commitments to companies again. That's what stops them. Until that happens, ain't nobody out to stop them. Us retailers definitely can't stop them. We can't stop them. I'm just telling you, that's my opinion. All of this, guys, is my opinion. I got no proof of none of this. This is just my opinion. Just like you can create your own opinion and start your YouTube channel and tell people your opinion. That's what I do on my YouTube channel. I just give them my opinion. There's no scientific proof. I'm not a financial advisor. I'm not trying to play one on YouTube. I'm not trying to tell nobody what to do. I'm just telling you what my opinion is. And it's dump day. Think about it. You close on Friday at all-time highs in all three major indexes, damn near. Almost every major index closes at an all-time, almost. And what happens? The next business day, dump day, it crashes. Everything crashes in one business day. What in the world could have happened to all these companies in one business day over the weekend? Come on, guys. You got to just put two and two together. This is just, it's obvious what they're doing. Now, the good news for me is if, go ahead, guys, you do that. If you can get this thing low enough, I'll buy in and you got my money. I ain't gonna even lie to you. I know exactly what you're doing, but in spite of that, if you get it under $100 a share, I'm in. But I'm not gonna buy it when my cost basis is 105. I'm not gonna buy it at 110 if my cost basis is 105. I gotta buy it under my cost basis. So if you don't get below my cost basis, I'm not buying it. I just keep my money in my account at the brokerage and be fine until it does. So here we go. The market also took a leg down Tuesday morning after two readings of manufacturing production showed signs of weakness. So now check this out. Here's where a lot of propaganda starts. And again, guys, it's just my opinion. I'm not saying that this is fact. I'm just giving you my little opinion. So please take it for that. It's just my opinion. Here we go. The market also took a leg down Tuesday morning after two readings of manufacturing production showed signs of weakness, reigniting concerns around slowing growth within the U.S. economy. S&P Globals showed a decline from July to August, while the Institute of Supply Management came in under the level anticipated by economics polled by Dow Jones. The market right now seems to be very jumpy to any data that comes in. This is the chief technical strategist at the Blue Chip Trend Report. We've become a very data dependent market. So he's basically saying any little negative data the market scatters, it creates all kind of stuff. Do I believe that? No, I don't believe any of that. What I believe is you got Wall Street traders controlling this whole thing, and they're gonna make money until long-term traders get back in who have a vested interest in parking money in companies and waiting for those companies to grow. Right now, you only got that. Especially not in the tech industry, you don't. You ain't got that in the tech industry. Normally what you got in the tech industry right now is people that getting in this thing quick and getting out quick. Getting in quick, getting out quick. Getting in quick, let me see Nvidia run it up, then I'm jumping out of here. They'll never last. Let them run it up to $128 a share and I'm jumping out. That's what you got in the tech industry right now. You ain't got long money and you got short money in there. You got nothing but short money in the tech industry. That's why you don't see any growth. That's why you see this seesaw. This little seesaw. Why? Because you don't have long money in there anymore. You got short money. No long money. All the long money is in money market accounts. 6.4 trillion of it sitting in money market accounts. That's where your long money is. When that long money comes back in, now we can get somewhere. Until then, Wall Street traders are going to control the day. They're going to rule the roost. See, Wall Street traders are short-term money, guys. Institutional investors, big boy institutional investors are long-term money. It's in money markets. 6.4 trillion of it. Again, guys, just my little 2 cents. I could be absolutely wrong. So go do your own research. This is not a convince you channel. It's an opinion channel. But that's what I believe. So they can talk about this whole thing about the market right now seems to be jumpy to any data that comes in negative. Okay, let's see if it's going to be jumpy upward on Friday if we get a good jobs report. Let's see. Since it's so sensitive to data, what if we get a great jobs report on Friday? Let's see how jumpy it is. Let's see if it jumps up. Since it's so jumpy to jump down, let's see if it'll be jumpy to jump up. Since it's so sensitive to data, let's see how sensitive it is on Friday if the jobs report comes out clean and good. What do I mean by clean and good? What I mean is if the jobs report comes out that we're adding some jobs, but we're under the estimates. So that means we're still got a good jobs market, but it's just right at the right temperature. It's not too hot. It's not too cold. It's right at that right temperature. That's a good jobs report. But if it comes in too hot and we're adding too many jobs, they can look at that as bad news too. Market could sell off again. Oh, golly, jobs market's too hot. Fed won't reduce rates. Let's sell off again. Any news they get, guys, they will sell us off. You just got to understand that. So Friday, when the jobs report comes, let's see how jumpy things are. Since everything is jumpy today off of some reports I ain't never heard of, but that don't mean they ain't good reports. I don't know what this means. The market also took a leg down on Tuesday after 2 readings of manufacturing production showed signs of weakness. What the hell is that? Okay, that caused everything to sell off? Okay, maybe it did. I don't know. I'm just telling you what these guys are saying, the experts are saying. It's jumpy. It's a jumpy market. The market right now seems to be very jumpy to any data that comes in. We've become a very data-dependent market. Tuesday's moves kick off the new trading month. Oh my God, you're just figuring that out? Oh yeah. Remember the last trading month, how they took it to the basement, and you know at the end of the month, September 30th, it was all the way at the penthouse. Now all of a sudden, the next business day, it's going back down to the basement. I wonder why. Sell off, dump day. So how does that help Richard Fain build wealth? Well, it helps me build wealth because I can decide when I want to participate. And I decided I won't participate unless it gets down to $100 a share. And if it don't, I'll continue doing what I've been doing, which is just dollar cost averaging in. Keep my lump sum money in the bank account until it gets to a price where I'm willing to buy it. And I just stick to that. Now, ServPro this morning, another one of my little shorties was under $8 a share. Now, I know some of y'all are saying, well, Richard, you said you're going to buy Serve if it's under $8 a share, and I did say that. The problem is I don't trust the Wall Street traders to tie my money up for a long period of time in this little company. I ain't doing that no more. I already got money in it. I got 8,500 shares. That's enough. I'm not tying up any more money in this little company until Wall Street traders I'm not tying up any more money in it. I may have to keep my money in here until Jesus come back. The way is, I may have my money in here until my Lord and Savior come back, man. I'm serious. Who knows when I'm gonna get my money out of this company now? I mean, Jesus might come back before I get my money out of this company now. Why would I put more in it? I wouldn't. These guys done ran this thing down to $7.76. Listen, man, I'm telling you, even me, you can get caught up in this. 2 weeks ago, I should have sold this position when it was $14 a share. Should have sold. Got greedy. Now I'm stuck in this thing until, who knows, 1,000 years from now, I may be still stuck in this thing. Who knows, at some point I might have to take an L on it. I might have to. I may have to just cut my losses and get out of here because these Wall Street traders are going to control this market until at least late November. Until after the election. They're going to control the stock market until after the election. So you better be prepared to stay long in these things until after the election. So now I'm stuck in ServPro to after the election. I may not be able to get out of this little company until next year. Now I got a big chunk of money stuck in this thing. The Wall Street traders done tricked me. And I'm stuck. Lord have mercy, I tell you, boy, these guys are crafty. They got me. I was at $14 a share, I should have sold this thing. I said, no, I got greedy. I'm gonna wait till 15. I'm gonna wait till 16. Boom, blink of an eye. The thing was at 11, and then it was at 10. Now it was at 8. Now it's at, see what I'm saying? That's why I try to tell y'all guys, if you're hanging your hat on these individual stocks, please don't. Because I'm telling you, you got to be the expert. You got to be able to keep up with these Wall Street traders if you're messing around with these individual stocks. I'm telling you, man, it's a brutal game. It's brutal. It's brutal. ServPro, I don't even know if I'll get my money out of this company. Who knows? Now, good news is that I made some money in it already, so it might wash itself out. But this last tranche I put in, I may not get it back. I may not get it back until next year. Because I guarantee you this stock is not going to go anywhere if Wall Street traders are in control of it, which they are. They are in control of the market right now. So I'm stuck in this thing while I watch it go down to $7.75 a share. Lord, have mercy, help me. That's why I'm glad I got most of my money in ETFs. Because if it wasn't for that, listen, man, I'd be on here crying right now. Trust me, because these Wall Street traders ain't fooling around. And if you ain't long-term in this thing and know what you're doing, I'm telling you, it's going to be a bumpy road for you. I told you, anytime you're out here picking these individual stocks, you got to be the expert. See, I'm picking these individual stocks like Nvidia, like the Mag 7, and then my shorts. I'm the expert when I'm picking these things. And the bad news is I'm not an expert. That's the bad news. But the good news for me, I hang my hat on ETFs like the S&P 500 and FTEC. 80% of my money, I hang my hat there. And guess what? They very good experts. See, they can keep up with the Wall Street traders. I can't. I don't have the resources to keep up with them. But I guarantee you State Street can. I guarantee you Fidelity can. I guarantee you Vanguard can keep up with them. I can't keep up with them. So that's where I don't need to be the expert in 80% of my portfolio. I let that to the real experts. I'm not an expert, but I try to be an expert in my own little 20% of the portfolio. And right now, I'm winning because I got so many shares of Nvidia. I'm winning, and I got the Mag 7, and I'm winning. But in my shorts right now, I'm losing. I'm losing. I'm losing in Serve Robotics. I might be 100 years old before I get my money out of this thing. Y'all think I'm joking. I might be 100 years old before I get my money out of this little company. Now that it done started this crater, right? The only saving grace for me on Serve Robotics is if when Nvidia bounces, hopefully it touches it and it bounces. But if Nvidia don't bounce, it ain't gonna bounce. Who knows? This thing could be down to $4 a share in a couple days. Who knows? So that's why I'm telling you guys, be careful out here on these individual stocks. Even myself, who've been doing this for 30 years, I may lose money on ServPro. I don't know if I'm prepared to stay in here 12 months. So I may look at this thing and say, you know something, Richard, you've made gains in other places, strap this little puppy and move on. And I'm not afraid to do that. I've done that before. That's just life. Sometimes when you're trying to be the expert out here, you get L's. You get L's. I don't care who you are. I don't care if you're a billionaire investor. I don't care if you're Warren Buffett. I don't care if you're any of these guys. They've taken L's too. All of them. Warren Buffett done took a lot of L's. A lot of them. But he got more W's than he got L's. That's the good news for him. Warren Buffett has took L's. See, I know we like to get in the chat and act like we know everything. And, oh, golly, Warren Buffett, he's an expert. Listen, man, even experts take L's, guys. You do know that, right? Don't be so naive to think nobody takes L's in the stock market thing. Everybody does. The key is you get more W's than you get L's. Everybody takes L's. Anybody that sits up here and tells you they don't take L's, they're lying to you. They're just lying. They're just lying. Anybody that's been doing this for any length of time, a long period of time, like I have, you're gonna take some L's. The goal is to have more W's than you have L's. That's the key. This notion of there's some perfect investor out here. Oh, Warren Buffett is perfect. He's an expert. He don't take no L's. That goes to show how naive you are and don't know what you're talking about. First of all, go research it before you get in here in the chat and start acting like you're an expert yourself. If you were, you wouldn't be in the chat. You're in the chat because you ain't one. All right, let's keep going. I made a commitment to y'all. I'm gonna leave these soybean billionaires alone. Let me leave them alone and get through this thing. Okay, here we go. Last little thing on this and we're gonna dip. We're gonna dip up out of here. Last little thing. The action comes ahead of the first major economic report of the month on Friday, when the U.S. government releases the August jobs report. Wall Street will also have to contend with seasonal headwinds, as September has been the worst month on average for the S&P 500 over the last 10 years. Now, here's the thing, guys. That right there is good news for me, especially for the S&P, because I can buy it in dip season. September is dip season. I love that. Please decrease S&P 500 so I can buy a little more of you and stop being so top heavy over here on these stocks. Let me switch back over here and get more heavier on the S&P and get back to the roots. Stop getting out here trying to buy all these individual stocks and I'm telling you, it's stressful. Stressful. Even for a guy like me, it's stressful. I got to get back to the game plan. The game plan is what? Don't be the expert. So come on down if you want to, S&P. Great. I'll be right there waiting on you with some money, and I'm going to leave these individual stocks alone. I'm going to leave them alone. I got enough of them. I'm done, especially until after the election, because right now, I'm just not going to keep buying more of them when I already got enough. I'm done. I'm going to redirect that money and start pouring it back into more ETFs. More ETFs where I ain't got to be the expert. I'm done being the expert over here in my own little portfolio, messing around with Serve Robotics and all these other little companies. Great, whatever I got in them now, I got them, but I ain't buying no more. Just telling you that for the record, I ain't buying no more. I'm gonna concentrate myself back to ETFs like the S&P 500 ETFs that track the S&P 500 index. I'm gonna refocus on that. I'm gonna refocus on the total stock market. I'm gonna start refocusing my efforts and my money. This money that I earn ain't going into individual stocks no more. I'm done. The only way I buy individual stocks is if Nvidia gets under $100 a share. That's it. Other than that, I ain't buying no more individual stocks. Everything is going to be recalibrated, realigned to ETFs, total stock market, and the S&P. I'm not even going to buy more. I'm going to just buy what I continue buying of FTEC in the Mag 7 through DCA. But the reserve money that I have that I want to invest above and beyond DCA is going into ETFs. And it's going to go into total stock market, and it's going to go into the S&P. That's it. That's it. I'm done with all these individual stocks. Why? Because these Wall Street traders, man, they're going to control this thing here on out. And I ain't got time for them. I got all the individual stocks I need for this year. I'm done. I got 11,200 shares of Nvidia. That's enough. Unless it gets under $100 a share. If it don't, I'm okay with that. I'm gonna hold my 11,200 shares as long as I gotta hold them. I might be 75 years old holding them, but I'm gonna hold them. I'm gonna hold them unless something crazy happens with the company itself. Then I will pull the cord, and if I got a little loss, I'll take it. If I got a little gain, I'll take it, but I'm not going to zero. So if something start going funny with the company from a financial standpoint, I'm bailing early. I'm not going, oh, they're gonna change, it'll work itself out. First sign that the company is having problems in any of my individual stocks, I'm bailing. Period. ETF's a different story because I ain't got to be the expert. But if you go back on my channel, guys, into my roots, you will know I've always been an ETF guy. Go back to the early days. Go back to the early this year. Just go back to January and start looking at the videos and the live stream replays. You'll see I've always been an ETF guy. And I'm gonna continue to be an ETF guy. I've always said 80% of my portfolio is in ETFs. The only reason I concentrated more on stocks is because of Nvidia. But it didn't change my makeup. I'm still 80% ETFs, 20% stocks. I got a lot of wealth and I know how to distribute it. I make a lot of money and I know how to distribute it. Now I have concentrated over the last 3 months more on individual stocks. That's what I've talked about. But I haven't abandoned my ETF mentality. I've always had an ETF mentality for 30 years. I haven't abandoned that. I just, for the last 3 months on the YouTube channel, have concentrated more on individual stocks because I was so excited about Nvidia. Now I understand Nvidia is a great company. It will always be a great company, in my opinion, until it proves to me it's not a great company. But that doesn't mean I'm just going to foolishly do stuff that affects my financial well-being. No, I'm not going to do that. I'm not going to do it for YouTube. I'm not going to do it for the private mentorship club. I'm not going to do that for anybody. I reserve the right to change my mind whenever I want to. I don't worry about what y'all think. I'm going to do what I got to do for best for me and my family. I recommend you do the best for you and your family. See, I ain't got to please no man. The only person I got to please is God, my creator. That's all I got to please. I'm not trying to please men. When I need to change direction and pivot, I don't need your blessing. I don't care if you like me. I don't care what you call me. Who cares? You don't pay my bills. Last time I checked, light bill come to me. Last time I checked, it ACH out of my account, not your account. Last time I checked, homeowner's insurance, you don't pay that. I pay it. Last time I checked, insurance premiums on the cars, you don't pay them. I pay them. So I don't have to tell nobody nothing why I change what I want to change. I'm going to change whenever I want to because it's my life. I recommend you do the same. I recommend you do the same. Now, for some of y'all out there that do want to buy individual stocks, you're in dip season. There you go. You got a perfect opportunity if that's what you want to do. As far as I'm concerned, I'm going to do status. I'm going to do the status. I'm going to do the same thing I've been doing. I'm just going to DCEAN every single month in the Max 7, FTEC, SPLG. Those are my three. I'm going to just do that. I ain't buying no more in the video unless it gets under $100 a share. That's it. It's clear. Clear, cut and dry. I'm not taking no more of my reserve money and buying no more Serve Pro or none more of these shorts. Done. Because I'm telling you, things are going to get real nitty gritty. See, the whole point of shorts is to be in it short. It ain't a short if I got to stay in the thing 6 months or a year. It ain't a short no more. So for me, I'm not going to be playing these games where I'm done. I got my shares. When I get out of it, I get out of it. And then when things settle out and we go back to a normal course of doing business where you got institutional investors smoothing this thing out, making long-term investments, and these Wall Street traders ain't controlling everything, then yeah, maybe I'll go back to some of that buying. But I ain't doing it. I ain't doing it. I ain't doing it to, oh golly, this guy, he don't buy individual stocks no more. Why not? You should buy more. No. See, that's one thing about me, guys. I don't buckle under pressure. I'm not easily influenced. So I'm not a follower. I don't do what other people tell me I need to do. I don't do that. I do what I want to do. See, I paid the price. I do what I want to do, and I recommend you do the same. Don't worry about it. You figure out what's right for you and your family, and that's the tune you march to. You figure out what's right for you and your family. Because I'm telling you right now, this thing gonna be bumpy. From September throughout that election, this thing gonna be crazy. So if you ain't built for it, all I'm telling you is get built for it or get out, because it's gonna be bumpy from now through the election. And then I think things will smooth out in late November, December. We may get a bounce. And again, guys, I'm just a guy giving you my opinion. I could be dead wrong. Who knows, right? But I'm okay with my thought process. All right, real quick, let's go in here and let's talk about September a little bit. Just a little historical perspective on September. Here's the headline. September's poor history is hard to ignore, but market has many things on its side, including the Fed. The bad news is that September is the worst month of the year, but there's plenty of good news to balance out the bad. Right? September is the worst month of the year for the Dow Industrials, S&P 500, and the NASDAQ, and the Russell 2000, according to the Stock Traders Almanac. While momentum usually overrides seasonal concerns, September is hard to ignore. It is the only month down on average, right? The last 4 Septembers have been particularly ugly. September is the only month that has been lower in each of the past 4 years. Here's the S&P. Here's the S&P. S&P 500 in September, it's been ugly recently. 2023 September, down 5%. 2022 September, down 9%. 2021 September, down 5%. 2020 September, down 4%. That is the S&P 500 over the last 4 years, guys. So what do you think is going to happen in this year, September 2024? You think it got a chance of being down? History says it does. Now, I don't know absolutely if it'll be up or down, but history says it's going to be down. So I'm going to refocus my efforts more on the S&P instead of individual stocks. I'll go ahead and pick up me a 3, 4, 5% dip in that instead of me trying to fool around with these Wall Street traders and outsmart them. Here we go. Elections are another wild card. Many traders believe the outcome will not be known for some time after the November 5th election, adding a layer of risk to what is normally the start of a seasonally strong period. What did I tell y'all earlier? Now, this is my opinion, and I'm telling you, it's been backed up here. I told y'all from September to after that election, it's going to be wicked. Normally, after the election, it starts a season of prosperity. Now, a lot of y'all might say, well, Richard, that's cool. That means I can go ahead and buy the dip while it's volatile. And I agree with you. I'm with you. I'm not mad at somebody that understands that and sees value in buying the dip over these next 2 to 3 months. I'm not mad at you. I'm just telling you that's not what I'm going to do unless Nvidia gets down to under $100 a share. I'm not going to take a bunch of money and just go buy random stocks on the dip. I'm not going to do that. That don't mean you can't do it. I'd rather take my money and go buy ETFs on the dip. That's all I'm saying. I'm not saying it's not an opportunity. It is an opportunity. But I don't have to do exactly what you do, and you don't have to do exactly what I do. You go buy whatever you want to buy. I'm just not buying any of them. I told you the only time I'm buying is if Nvidia gets under $100 a share. I ain't buying no more individual stocks outside of the Wealth Transfer Blueprint 1.0. None. No shorts, no longs, If it ain't in the Wealth Transfer Blueprint 1.0, which is a DCA Wealth Transfer Blueprint, if it's not in there, I ain't buying it. Just saying. So you can say whatever you want to say. I ain't buying it. My recommendation is you better figure out your strategy for this next 2 to 3 months. Figure out your strategy. That's all I'm telling you. I got my strategy, and I ain't finna get walked back on it, and I ain't gonna apologize for it. I ain't never got on here and tell y'all I'm some stock trader and you gotta I'll always be in stocks. I'm a stock guru. I never said that. I already told y'all on record I don't know nothing about stocks. What I know is companies. I don't know about no stocks. I'm an ETF guy and have been an ETF guy for years. If you don't believe me, go back on my YouTube channel and watch the videos. That's what I've been. Last 3 months, I've concentrated on stocks because that's what I got really excited about with Nvidia. Now I understand, hey, this is gonna be a longer process than you thought, sir. And guess what people do when they come up with that conclusion? They learn how to pivot. They try something different. I keep telling y'all, keep on doing the same old thing you're doing, you're gonna get the same results you've been getting. You better try some new activities. This is a new activity for me. I'm switching gears. I'm gonna keep my stocks that I currently have, but I'm going back heavier on ETFs because that's where I ain't gotta worry about nothing. That's where the big boy ETFs are gonna take care of everything they need to take care of because they are there to make money and they can match these Wall Street traders dollar for dollar. They know when to get out of something and get into it and I don't know that. They do. I don't. So I'm not gonna try to play this game where, oh, I'm gonna beat Wall Street traders. I'm gonna buy another 10 different companies and beat them. I ain't gonna do that. You can do that, but I'm not gonna try to do that. So my individual stock position is done. 11,200 shares of Nvidia and these little shorts that I got. Those are my individuals. That's part of Blueprint 2.0. Blueprint 2.0 is on hold. I ain't buying nothing else in Blueprint 2.0 until Nvidia is under $100 a share. If it don't get there, I ain't buying nothing else. All the rest of my dollars going forward are gonna be going to ETFs. That's it, right? ETFs. If I do take a sizable chunk of money out of my reserves and I'm gonna buy anything in the stock market outside of DCA Blueprint 1.0, if I'm gonna take money out of my reserves to buy anything, it'll be ETFs. I'm not buying any more individual stocks. Because at this point, for me, I've bought the dip far as I need to buy the dip on individual stocks. Now, there's some of you, there's an opportunity to buy the dip and buy it if that's what you want to do. Nothing wrong with that. I've told you exactly what the cycle is going to be. The cycle is going to be they're going to run it down to the basement. And if you can pick it up at the basement, just wait for them to run it back up to the penthouse and do what they do. That would be if that's the strategy I wanted to live by, that's what I would do. I would just watch the Wall Street traders run it all the way down to the dirt. And once they run it to the dirt, you'll know when it's turning around because they're going to start going back up. Now, again, I'm not scientific on this, and I'm not telling you guys I know what I'm talking about. I'm not trying to give you advice here. I'm just telling you, figure out your strategy and go with it. Right? My strategy is not to try to keep up with the Wall Street traders. My strategy is to get back to my roots, which is buying ETFs, total stock market, S&P, FTEC, and hold them long term. And let them fight with the Wall Street traders, not me. I can't beat the Wall Street traders, guys. That's why I'm stuck and serve right now. I can't beat them. I'm not gonna try to beat them. So what I'm gonna do is go back to what I know best, which is ETFs. And that's what I'm gonna concentrate. Now, will I talk about individual stocks? Yes, I will. It's my YouTube channel. I'm gonna talk about what I want to. Don't like it, don't show up. That's all I can tell you. But I'm gonna talk about whatever I wanna talk about on my YouTube channel. But I'm also tell you what I'm actually doing. And I'm telling you to your face what I'm doing. I'm already enough individual stocks for me. I'm not comfortable buying any more of them in this volatile environment. I'm more comfortable buying ETFs. So that's what I'll go back to buying more of. I'm not buying any more individual stocks. It's just too volatile. These Wall Street traders are crazy. They already got me stuck in Serpro right now. I can't get out. Well, I guess I could get out, but I'm not. Now, Serpro no longer is a short. It's a dang on long. And I got to hold this thing for a year before I can get my money out of it. And the only way I get my money out of it is if the Nvidia goes up. If Nvidia don't go up, I ain't gonna get no money out of it, but I'm gonna take a loss. Just gonna be honest with you. I'm gonna take a loss if Nvidia don't go up on soon. Because this little company ain't gonna survive unless Nvidia goes up. It's the only reason it jumped in the first place is because of Nvidia. That's what jumped it back in July and early August. July, when Nvidia got into it, is when it jumped. Since Nvidia's on the do not buy list, since Nvidia's on the do not buy list, and I'm just being facetious, guys. Nvidia's a great company and I love it. I got 11,200 shares and I ain't selling them. So I know I joke a little bit, I'm facetious with it, but it's a great company. I'm not selling my stock anytime soon. When I do decide to sell them, I will tell you guys. And not because I need to tell you, I'm telling you because I just want to tell you. But right now, I'm not. I have no plans of selling my Nvidia stock. I got no plans of selling any of my individual stocks right now. But that doesn't mean down the road, if something changes, I won't sell them. I will. I'm not going down with the Titanic. I can promise you that. I'm not going down with the Titanic. I'm going to plug that hole, keep myself above water, and live to fight another day. So all I'm telling you is figure out your strategy. You need to sit down with yourself and figure out your strategy going forward with this thing. I still think the stock market is a wonderful way to build wealth. I did it for 30 years and I continue to do it. But you got to also understand your strengths and your weaknesses. My weakness is trying to be some individual stock guy and compete with no, that's my weakness. My strength and where I build my wealth the best is through ETFs that track an index or track a sector. That's where my strength is. It's time for me to get back to my strength and leave this weakness alone. See, I'm not trying to improve on my weaknesses. What I've learned a long time ago, one of my coaches told me this. He said, listen, Richard, if you want to be successful, do this. Maximize your strengths, not your weaknesses. And that's what I'm getting ready to do. Maximize my strengths, which is ETFs. Maximize your strengths, not your weaknesses, guys. That's all I'm telling you. You fit in where you want to fit in. Keep the main thing. But for me, you know where I'm headed. I'm headed back to ETFs, and that's what I'm going to concentrate on going forward. Will I talk about individual stocks? Yes, because I got a YouTube channel, and that's what I do. But I'm not buying anymore. So you know that up front. I'm not buying anymore. I'm buying ETFs, right? That's where I'm at in my wealth building strategy. Sometimes you got to pivot. I'm already heavy enough in individual stocks. I don't want to get any heavier. I'm not going to just keep buying the dip, hoping one day something. Listen, I bought enough. That's it. The dip that I buy now will be in ETFs. Total stock market, S&P, FTEC, which is the information technology space. Those are the 3 ETFs that I'm going to buy. No more individual stocks. So now you heard it. All right, so let's keep moving on this one, and then we're going to wrap this thing up. The good news outweighs the bad is the Fed put back. Now let's see what they're talking about. They're talking about the Fed and how the Fed could impact September and potentially make it a better September than it has been historically. Let's see what they got to say. Another important support for markets, Fed rate cuts are expected. At Jackson Hole, Chairman Powell made it clear that the Fed had shifted its attention from fighting inflation to the job market. According to CME Fed Watch, the vast majority of traders, 69.5%, believe the Fed will cut 25 basis points in September. 32% believe 50 basis point cut is possible. It makes sense. Most traders don't think the Fed needs to be very aggressive yet. with the job market still relatively strong. Most traders don't expect the Fed to get aggressive unless it has to, right? So Friday, the jobs report comes out. Let's say the jobs report comes in, economy only added 125,000 jobs, but the market, the experts said it should have added 175. Is that a time for the Fed to get aggressive? Maybe. Market says 175, it only added 125. Also, what if unemployment goes from 4.3% to 4.4 or 4.5? So that report coming on Friday could change how deep the rate cut is. It could go from 25 to 50 based on that report. And that's what they're talking about here. Now, if it goes 50, is that enough of a tailwind to change the trajectory of September when it comes to performance for the stock market? Is that enough? I don't know. We'll have to see. We'll have to see if that is considered a strong enough tailwind to change the dynamics of what typically happens in September in the stock market, which typically it trades lower, and it has for the last 4 years. I don't know. We'll see. We got to wait and see on that one. I'm a little concerned if they did something more aggressive, as much as 50 basis points, because I'm concerned that the market participants may view that as the Fed seeing something scary in their economic data and are moving aggressively to get in front of that. What he's basically saying is, even if they cut 50, you and I think it's a good thing, the market may look at it as a bad thing, it's something wrong, and they may sell off anyways. See, this is what I'm trying to tell y'all guys. You can't predict what these guys are going to do, these Wall Street traders. You can't predict it. You can guess, and I guess you got a 50-50 chance of guessing right, but to say what they're going to do exactly, you don't know. Who would have ever thought Nvidia would come out and kill everything and immediately stock price sells off? Nobody thought that, but it happened. So all I'm telling you is have a plan together either way. I don't think the 25 basis point is going to bounce the market, honestly, because that's already priced in. Ain't nobody going to be surprised that the Fed cut rates 25 basis points in September, guys, on September 18th. No one's going to be surprised. Everybody already believes that's going to happen. So that's not going to be a tailwind to bounce the market. My opinion, it ain't. So we'll see. We'll see. I think what we're starting to find out, at least for me, Richard Fain, I'm starting to find out this is a longer term position that I'm working in. This is not a, oh golly, this thing is going to go to the moon. No. I don't see that happening. Not anytime soon. Not based on what we see right now. Now, anything can happen. Remember, 2023. Now, we were not in an election year, but still, 2023, what happened? Last 9 weeks of the year, the stock market went bananas. Biggest, strongest year-end performance in history. Could happen again in 24, guys. I don't know. I don't know. All I can do is get good investments and stay long in them. That's all I can do. I can't predict any of this stuff. And I'm not going to try. I'm done trying to predict anything. All I'm going to do is get back to what I normally did for 30 years, which is buy these investments and just stay in them long. Good companies, heavy ETFs, limited stocks, individual stocks. Just stay heavy ETFs and limit my position and my exposure to individual stocks. That's what I'm doing going forward. And you got to figure out what's right for you. I don't owe anybody an explanation for my pivot, right? And you don't owe me an explanation for your pivot, or if you don't pivot or whatever you do. Do what's best for you and your family. Right now, the pivot for me is not heavy in individual stocks anymore. I'm going to be refocused and reconcentrate back on ETFs. And any money I got on the sideline that I want to invest and buy the dip, it'll be a dip into ETFs. It ain't going to be buying no dips into no more individual stocks. I'm done. My plate is full. My cup runneth over. I'm done. So it's all ETFs for the rest of this year for me. So if I got money on the sideline and I say, well, golly, that S&P 500 is down by 5% in September. That's a great opportunity to buy the dip. Then it'll go into my S&P 500 ETF. But it will not go into individual stocks. I'm done. I'm done with individual stocks for this year. There's a lot of opportunity there, but it's the price you got to pay mentally for that opportunity is just not worth it to me. It's not worth it anymore to me. It's not worth the mental price I got to pay in order to keep chasing these individual stocks and get more and more and more exposure, more and more and more exposure, more. It's not worth it anymore for me. So therefore, I do what? I change directions and I pivot to something that I don't have to worry about. History tells me it's going to be fine. My 30 years of experience buying ETFs and index funds tells me it's going to be fine. So that's what I'm going to reposition and refocus on. And I hope you guys sit down and figure out your strategy. Figure out whatever your strategy is. But have a strategy. I still think the stock market is a great opportunity over the next 10 years to build a lot of wealth. But you got to figure out a strategy that works for you. You got to figure out a strategy that allows you to sleep at night. You got to figure that out. I can't figure it out for you. I done figured mine out, and I'm fine with it, and I'm moving. I don't need no, hey guys, I'm running a poll down in the description box. I'm running a poll down in the comments. Give me your thumbs up. Tell me what you think I should do. No, I don't do that. I ain't running no polls. I'm doing what I'm doing, period. So you do whatever you got to do. And the same thing goes to my wealth builders over on the private financial community on Patreon. Guys, figure out what your strategy is. I told you what mine is. Figure out what yours is. Figure out your strategy that you can live with. And don't be afraid to pivot if you need to pivot, guys. No shame in that. There's no shame in you pivoting when you need to pivot. You know what the shame would be? Is if you know you need to pivot and you don't. And you leave yourself exposed. And you leave your family exposed. That's what's a shame. When you know you need to pivot and you don't pivot, that's on you. That's on you. So know your plan, execute your plan, and be ready to pivot when it's time to pivot. Period. All right? All right, guys, appreciate y'all, man. Get down in that description box. Do me a big favor. Click on that Moomoo link. Get yourself up to 15 free stocks when you open up a new Moomoo brokerage account. And then you're in position you can go shopping, whether it be individual stocks, ETFs, whatever you like. It's up to you. It's your financial plan. You ain't got to do what I do, right? Do whatever you want to do. It's your plan. You take control of your own plan, and having that new brokerage account with the Moomoo folks down in the first link, description box in the first link. Click on the Moomoo link, put $100 in your new brokerage account, you get 5 free stocks. You put $1,000 in your Moomoo account, you get 15 free stocks. Now you can take those free stocks and you can keep them and allow them to mature, or you can get them, you can convert them into cash, and then you can roll them into ETFs if you want to. That's up to you. You don't have to hold the individual stocks that they give you guys if you don't want to. If you want to, hold them. If you don't want to hold them, don't. Sell them, put them in cash into your brokerage account, and then redeploy them into ETFs if that's what you want to do. Nobody says you got to sit up here and only buy individual stocks, guys. You don't. You can buy a combination of individual stocks, ETFs, only ETF, whatever you want to do. That's the key. You make the decision. Don't allow some joke on YouTube to make that decision for you. Don't allow somebody on TikTok to make that decision for you. You make it. But you're going to need a world-class brokerage app in order to be able to make that decision. And that's where the good folks at Moomoo come in. They're going to give you up to 15 free stocks. So click on that link down in the description box. Open up your Moomoo account today. Go get that free stock. Go get that free money. And guys, if you want tutorial videos to teach you how to use the Moomoo brokerage app, send me an email through my website, www.richardfain.net. Second link down in the description box. Send me an email and say, hey, Richard, I opened my Moomoo account. I funded my Moomoo account. Please send me those tutorial videos so that I can learn how to use this brokerage app. And now I got an opportunity to do something with paper assets if that's what I decide to do. I will also send you my Wealth Transfer Blueprint 1.0, which outlines the 3 things that I'm buying. I'm buying an ETF, which is an S&P 500 ETF. I'm buying an information technology ETF, and I'm buying the Magnificent 7. It's 50, 30, 20. That's what I've been doing since January, and that's what I will continue with throughout the rest of the year through DCA, dollar cost averaging. I take a certain amount of money every single month, and I deploy that money into those 3 investments, 50% in SPLG, 30% in FTEC, and then 20% in the Mag 7. That's what I do, and I will continue doing that throughout the rest of the year, right? So if you want that Wealth Transfer Blueprint 1.0 video that outlines that for you, add that to the email when you send me the email for the Moomoo tutorials, and I'll send those out to you. Again, I'm not a financial advisor. I don't play one on YouTube. I'm not trying to be one. I have no Series 7 license. I have no Series 6 license. I'm not a CFP. I'm not a CPA. I'm just a regular guy on YouTube who has been buying ETFs and individual stocks for 30 years on his own. And my strategy is simple. Traditional investing, buy and hold, big boy blue chip, long term. That's the strategy. So if you like that strategy, do me a big favor. Get to the description box, click on the website link, www.richardfain.net, second link down in the description box. You're gonna see a membership button or a join button, and I would ask you to consider joining the fastest growing financial community on Patreon, the Wealth Builders. You can get access to the Wealth Builders. We have over 1,000+ members in that community right now. We've been up 4.5 months. And that's the strategy in our community. Traditional investing, buy and hold, big boy blue chip, long term. That's the only strategy we're gonna have over there in that community. If people have other strategies, that's good for you in your outside world, but we ain't bringing new strategies over there. So, oh, hey man, I know y'all got this traditional investing, buy and hold, big boy blue chip long term, but I don't like that strategy. I like this strategy. Well, then you need to go find your community to start. And you can start your strategy over there, but you ain't starting it in there. That's the strategy in that club, in that community. So if you want to be a part of that type of strategy, come join us. Come be a part of it. Dive on in to this community and let us be a part of your financial world, and you be a part of our financial world, and we help each other get to that financial freedom. All right? If you want to be a part of that, like I said, get down to the description box, click on the website link, www.richardfain.net, and come be a part of that. Don't forget about the Moomoo link. Get you up to 15 free stocks as well. That's the first link down in the description box. Well, thank you guys. I appreciate y'all. Y'all have been wonderful. September has started. The market is reacting. And right now it ain't reacting in an upward fashion. It's actually reacting in a downward fashion. But again, that can be someone's opportunity, or it could be not an opportunity. You got to figure that one out. I've given you my take on this thing and what I'm going to be doing for the next 3 to 4 months until this thing shakes itself out. I'll be doing exactly what I told you I'm going to be doing, and that is buying ETFs and buying the dip on ETFs. No buying the dip on individual stocks unless Nvidia gets under $100 a share, and then at that point, I will buy more of that. But other than that, I'm not buying any more individual stocks for the remainder of the year, with the exception of Nvidia under 100 a share. Outside of that, every free dollar I have that's earmarked for the stock market will go into ETFs. I'm getting back to my roots that made me what I am from a financial standpoint, and I'm stopped with this whole, oh, I'm gonna have all these individual. No, I'm not doing that no more. I'm done. Let's get back to the 50-30-20 on the DCA, and let's just get back to being traditional, buy and hold, big boy blue chip, long term, because it's served me well over 30 years. So appreciate y'all for checking in, man. I'll be back this afternoon with another little short video, edited video about 6 o'clock. So if you want to check that out, you're more than welcome to. Like I said, man, if you're stopping by the channel for the first time and you want to, subscribe. If you want to share it, share it. If you want to thumbs it up, thumbs it up. All I can tell you guys is stay strong, stay long. Thoughts become things. See it in your mind, hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy. I'm going to catch you guys on the next one.